Hey friends, welcome back to Evolve or Die. It is Market Monday, and we're just going to be talking a little bit about what we can expect from the markets this week with the Omicron variant of COVID being spread in the southern tip of Africa and being reported in some parts of Europe. We're seeing a few travel bans being in place and some restrictions through some American and international airlines. We're seeing some interesting things happening in the crypto space. We have Jack Dorsey stepping down from Twitter. We have a lot of interesting things going on this week, you guys. And yeah, there's a lot of things going on after the Thanksgiving holiday. This week is going to be a full market week. Last week was a little bit short, closed on Thanksgiving, half a day on Black Friday for the markets. We're going to see a lot of companies monitoring their sales this week, especially with Cyber Monday going on today. We have some middle income household projections that are reflected a 12% increase in sales in comparison to this time last year during 2020, during the Black Friday, Cyber Monday holidays. We're expecting to see Congress come back in a session, surprise, surprise. Janet Yellen has been warning of America hitting its debt limit. This is not anything new. We have historically raised the debt limit so many times in the history of this country. So they're expecting we're going to hit the debt limit again on December 3rd, which is December 3rd. I think that's this Friday. Let's see, we have the Build Back Better infrastructure bill that just got passed. That was a $1.75 trillion spending bill, and we're seeing a lot of fears of hyperinflation, you guys. I think the crypto space is just entering a phase where it's going to go hyperbolic, because if you think back to COVID, the beginning, during the middle of 2020, if you think back to that time, we saw the stock market take, one of the deepest dips that we've seen in modern history in quite some time. So what happened when that scared reaction happened in the market, that reactionary pullback, I think we saw the Dow drop 20% on that day when COVID was classified as a global pandemic. The crypto space rallied. When there are fears and uncertainty in the traditional centralized financial markets, what we've seen over the past couple of years is the crypto space usually responds positively to that. So with all the fears of hyperinflation that we are seeing, and we're hearing these politicians telling us that Bitcoin and Ethereum and these different altcoins are a threat to the stability of the US dollar, it wouldn't have anything to do with the fact that they've created 36% of the money supply in the past year and a half. That doesn't have anything to do with the destabilization of the US dollar. It's crypto. But anyways, we're seeing our legislators and our politicians lie to us. But people are finally realizing that the best hedge to inflation, the best way to make sure that your money doesn't consistently lose value, is through purchasing crypto, an appreciating asset. So we're gonna have a lot of interesting things happening this week. Today we did have the National Association of Retailers releasing its US pending home sales for the month of October. So let's go over here and take a look at how the housing market has been performing. It looks like the pending home sales index has reflected that home sales are up about 7%. So that's good. That's something. I'm still personally waiting on a deep market correction in the housing space, so I can enter that space and begin, looking for real estate and looking for a house. And yeah, we have some interesting stuff. We have Jack Dorsey stepping down from Twitter, and we know traditionally, guys, the stock market does not respond well to uncertainty. They don't respond well to not knowing what's going to happen, not really knowing how serious this Omicron variant is. So obviously we can see here lots of travel bans happening. Biden's commentary, it's almost inevitable that Omicron will be in the US at some point. That's a given. I mean, it is a highly transmissible mutated variant, and there's a lot of different conflicting, I don't want to say conflicting, but there's different analysts and experts perspectives. There are some that are coming out of South Africa saying this is not necessarily a variant of concern when it comes to like the severity of infection, but it is much more transmissible and it is much more contagious. And there are cases of reported increased potential of reinfection. So it's kind of, again, that uncertainty. It'll be interesting to see what happens with the airlines. Like I did speak with my fiance about it, and he has a few call options on Walgreens in the event that it is a serious variant and there's another rush on the supplies for people's immune health. So I think that was a pretty good call, a good prediction about how the markets are going to respond to this new variant. And he has some puts out for Delta Airlines and a few other airlines. So I think that was a good call, even if the market doesn't necessarily respond the way we think it's going to, which again, that uncertainty, if you look back during the middle of 2020, during March, we saw that fear and uncertainty, and we saw the response to that fear and uncertainty through the markets. So it's kind of another, the markets are holding their breath scenario, seeing what's going to unfold with this variant and what are its impacts going to be. Like, are the vaccines still effective? We have a lot of information coming from Moderna and Pfizer saying that basically get the booster shots. So we'll see what happens in terms of the market's responses. We see here that Biden's saying that lockdowns are off the table, which is that's a good sign for the market. That's a good sign for the economy. And of course, he's like urging people to wear masks and get the vaccines and things of that nature. So I think the market's like holding its breath a little bit. We saw the Dow down about 800 points on I think Wednesday of last week. I think we saw it take a really deep dip on Wednesday, and we're doing a little bit of recovery today. We're up about 343 points on the day. So the markets really seem like they're holding their breath, and we have some interesting things going on in the crypto sphere. Like I said, people are, I think, really coming to terms with crypto is an excellent way, probably the best way at this time to hedge inflation. And this is not financial advice. I'm not a financial advisor. This is just for educational purposes only. And if you take a breakdown of all of the different asset classes, Bitcoin, oil, commodity stocks, high yield corporate bonds, cash investment grade corporate bonds, and gold and government bonds, we'll see that the year-to-date return for Bitcoin is about 98%. The return on oil is about 62%. The return on commodities is about 51%. Year-to-date total return on stocks is about 18%. Year-to-date returns on cash, 0%. Year-to-date total returns on gold is negative 5.9%. Year-to-date total returns on government bonds are negative 7.4%. So guys, I know we hear Janet Yellen and Elizabeth Warren and Hillary Clinton, yapping about how Bitcoin is a threat to the US dollar. And that's true to a certain degree, but it's not true in the context that they're trying to make you believe that it's true. The entire purpose of crypto is to destabilize the dollar, if we're being extremely technical about this. But this is the best hedge to inflation. And what I think is happening is a lot of these politicians are invested in so many individual stocks, and they're invested in ETFs and different mutual funds and index funds that are currently suffering because of the fears of inflation. And so basically, with people making this mass exodus out of the stock market, making this mass exodus out of centralized banking, taking their savings and inserting them into crypto, what we're seeing is the traditional returns that these indexes are used to seeing, these returns that high yield savings accounts are generally used to seeing are even lower. They're even lower than they have been, because people are finally realizing, in spite of the yelling, that crypto is the best hedge to inflation. Like, I think people are finally tired of seeing their money diminish in savings accounts and are funneling it into crypto. And this is not good for the policymakers that are holding, you know, the SPY funds, the S&P funds, the Dow Jones funds, the Berkshire Hathaway funds. This is not good for them, because traditionally the markets, the centralized financial system, has been operating to facilitate these returns within this space. And so they're telling the public that crypto is dangerous. Crypto is a threat to the US dollar. It's a threat to our national security and our financial system. What they really mean is it's a threat to their personal return in the stock market. That's what that translates to. However, I do want to point out, we're seeing some policies that are coming down from the Build Back Better bill that they're specific to crypto. However, an administration that doesn't even understand the technology is pushing these kinds of legislations that are going to close tax loopholes for cryptocurrency investors and potentially subject different crypto transactions to wash sale rules. So basically, a wash sale rule is just if you own a stock or any security and you sell it at a loss, if you don't buy that security back within 30 days, then you are able to write it off. You're able to write off your loss in your taxes when you're filing them. So what they're attempting to do, and this is not finalized just yet, but they're basically attempting to eliminate the dual benefit that crypto investors get, and with the ability to write off losses on taxes. So they're trying to implement wash rules within this legislation, and it's not finalized just yet, but the result of this is basically going to be like Bitcoin, Ethereum, Doge, all crypto is going to be subject to these different wash rules, and this basically prevents investors from claiming tax benefits through investment losses. So this is a win for the IRS and the government, of course, because even though they don't even understand the assets or their potential, their first priority is to tax and basically act as robber barons to the crypto space. But that's beside the point. But that's not good news for us, guys. You really got to keep up with the different tax laws that they're administering right now, because after 2022, everybody's taxes, all of our filing of taxes are going to look so different. Like if you trade crypto, and are going to be subject to so much more scrutiny than in the past. So that's not a win for us, guys, in that sense, but it is a win in terms of adoption and policymaking and legislation. I think the government as a whole, the SEC, the administrative, Biden, Congress, all of them, they're so vastly lacking in information and understanding about the infrastructure of the crypto space and about the mechanisms and the functionality, vastly lacking. But it is still a partial win, because at least there's movements towards adoption. And unfortunately, with massive adoption, like the regulation is going to follow. The regulation is a direct precursor to legitimacy. So it's partially a win, but it's not good for us in terms of tax write-offs, because if the wash sale rules apply, that likely means that the day trading restrictions are soon going to follow. Mark my words. The pattern day trading, if you're not aware, if you're trading stocks or securities, you got to have a minimum of 25K in your account to have unlimited day trades. And a day trade is simply buying and selling the same asset within the same trading day. And if you don't have 25K, you have 3 day trades per 5-day trading window. So every 5 trading days, you get 3 day trades if you don't have an account balance of 25K. Why is this super important? Because most people that actively trade crypto, like for swing trading purposes, they trade hundreds of times a day potentially. With these day trading rules that I think are going to follow, because the wash sale rule, this is leading up to, they're going to implement some pattern day trading here soon. But that's a big deal, because if that feature is taken away from crypto investors, we're basically going to be punished if we don't have an account balance of $25,000 and we would like to buy Bitcoin and sell it in the same day. We'll get a day trade for that. So I do think that's coming here shortly. Again, also not a good thing for us, but I have a few more things I want to talk about in terms of market updates for the day, and things to expect for this week. We have some pretty serious purchasing manager index recordings getting released this week. That's pretty exciting. It'll give us some insight into some of the supply chain logistics that we've been struggling with. That's also contributing largely to inflationary prices that we've been seeing across pretty much every single industry. So tomorrow we have Salesforce, Global Foundries, and HP Enterprise. They have earnings tomorrow. Stay tuned for that. We do have Snowflake, CrowdStrike, Synopsys, and Viva, and Okta also reporting earnings on Wednesday. We have the Market Manufacturing Purchasing Manager Index getting released on Wednesday. We have U.S. construction spending reports getting released on Wednesday. We have U.S. total vehicle sales also being released on Wednesday. Thursday, we have earnings for DocuSign, Kroger, Dollar General, Ulta, and Marvel Technology. So they have some earnings coming up here on Thursday. We have some market services purchasing manager indexes coming out on Friday. We have some retail sales reports getting released on Friday as well. And like we talked about earlier, the National Association of Retailers did release its pending home sales today. And like we talked about, home sales are up about 7% for the month of October. So I think that's a good thing. I mean, I'm not seeing the housing market correcting at a level that I would like to see it yet, considering how inflated the prices have been over the past year. But yeah, so we have some interesting things going on here, guys. And I think that the crypto space I think we're entering uncharted territories in terms of adoption and exposure. And a lot of people were exposed to crypto like through the meme craze, through like Dogecoin and Shiba and all of that. But I think people are really starting to understand that while the US dollar used to be backed by gold, a gold standard, it is now only backed by our faith in the government. It's not backed by anything. It's backed by literally nothing. As long as we keep believing that the US dollar has value and that the US government is going to keep printing money so the US economy doesn't collapse, that's what gives it value. Crypto, on the other hand, is backed by endless utility and solutions to so many problems that we see in the healthcare industry, the financial sector, the the governmental realm. Like there's just so many use cases and functional utility that is backed behind so many projects. And of course there's a lot of meme coins, there's a lot of scam coins, there's a lot of useless coins, but in terms of the adoption and people getting exposure to crypto and looking for value, we're going into unprecedented, uncharted waters, because like we talked about, guys, a lot of people got their exposure, you know, through the meme rallying, but now it's transitioning to like, okay, I want to protect my money in value coins, in store of value or utility coins, or you know, smart contract coins like Ethereum. And it's really exciting. There's a lot of stuff that's going to be going on this week. I think we're going to keep seeing Ethereum, you know, bouncing down to 4,000, maybe dipping even a little bit below that. I think we're going to keep seeing Bitcoin dip all the way, probably down to between, I think Bitcoin's going to keep bouncing between like 50 and 65 for a while. But that was just a few things I wanted to put on everybody's radar in terms of like the virus, how the markets are going to respond to that. I think they're holding their breaths at this time. The Dow does seem like it's picked up a little bit of its spunk back that we lost last week. But in terms of like airlines, it's hard to tell. It's all going to depend on how people react to the news that's going to keep being released about the variant, and the effectiveness of the vaccine responding to the variant. So tomorrow I'm going to have a video for you guys all about crypto. It's going to be Crypto Tuesday tomorrow. I'm going to put you guys onto some of my high conviction plays for the long term and some projects I think are going to see a lot of rallying in the upcoming weeks and months, especially Ethereum being a now deflationary asset. I think we're going to see Ethereum rally into next year. But that pretty much sums it up for today, guys. That's kind of what we can expect in the different markets for the week. We've seen some deep corrections in some of my personal favorites. We've seen Palantir take a deep dip. We've seen Black Sky take a deep dip. We've seen BKKT take a deep dip. But these are buying opportunities, friends. Okay, so tomorrow we'll have Crypto Tuesday tomorrow, and yeah, I'll see you guys back and keep evolving until then.